Guys, thanks to you both. Sam, let me just start with you and just lay out for our audience, if you can, what we should sort of expect to see here. We've got a Chapter 11 filing. We've got a lot of questionable behavior that might rise to the level of fraud. But what's going to happen next?
Good morning. Thanks for having me on. So I think a few things are going to play out. First, in the Chapter 11 process, you're going to see investors or depositors lining up to lay in their claims to get a recovery. I think you'll see a bunch of civil litigation lawsuits by those who suffered losses and will try to sue folks like perhaps Sam Bankman-Fried or others who they think have exposure for the issues that have brought about FTX's demise. And then you're going to there are reports of investigations by the Department of Justice, where I used to work, the SEC, and other regulators who are looking at whether or not FTX had sufficient disclosures, whether they were improperly commingling assets, whether there were conflicts of interest that weren't disclosed in terms of taking customer deposits and then putting them into Alameda for risky bets, and other issues. So fraud and other types of issues that could come up. And to be clear, I'm not saying that any of those allegations are correct. That's just what's in the public swirl in terms of public reporting.
Yeah, a lot of reporting on that from others, my own as well, from ours at CNBC, in terms of at least what may have been occurring. Howard, let me come to you with a similar question and sort of building on that. Some are asking, where was the SEC already? Why wasn't there more regulation? Why wasn't there more oversight here to sort of understand where they may have already been overstepping the lines?
Yeah, so I think that's an excellent question, and I think the question points out the legal gray area that crypto operates in. I mean, the idea behind crypto originally was that it was going to be free from government oversight, decentralized, not reliant on a central authority. And look, guess what? Maybe having a central authority actually makes a lot of sense. I mean, the SEC under Chairman Gensler has been pushing for the last few years for greater regulation of crypto assets. You saw that in the Coinbase insider trading case, in the LBRY case in New Hampshire, in which the SEC just won summary judgment that the coins at issue in that case were actually securities. And this is an ongoing process by the SEC. The SEC is looking to exact more authority over this space, and there are good reasons for that. If crypto is a regulated asset, if these exchanges have to register and the coins and the assets need to be registered, that means that regulators would be on hand, would get greater insight into the operations of these companies. And that, I think, is at the core of what has occurred here, is that there is a complete lack of transparency into what Sam Bankman-Fried did, what they did with the assets. And I echo the comments of the previous commentator who said that we don't know exactly what happened, but from all the reporting, it looks like there was a lot of misconduct that was completely unknown to both regulators, to the investing republic, as well as to FTX's counterparts.